Hey, what's going on? It's November 15th, so you know we always got to start with the rant before we do the November or the end of the month PowerPoint slide trading wrap up. We did pretty good this week. A few people follow me in the Discord. If you didn't follow me in the Discord and you saw the trades coming out and you didn't take the trades, that's on you. But Forex trading, a market that's often romanticized as a way to make quick fortunes and live a life of luxury. But the reality of it is today we're going to explore the differences between our expectations and the harsh reality of Forex trading. All right, just in trading in general. All right. When new traders enter the Forex market, they're often met with a steep learning curve that can be overwhelming. There's so much to learn from technical analysis to risk management, and it can take months or even years to develop the constant strategy, and that's not even to mention the emotional discipline that required to stick with your plan and avoid impulsive decisions. It's a journey, and the mentality and emotion, it's mentally and emotionally demanding to say the least. Emotional decisions, emotional discipline is crucial in Forex trading because our emotions can be our worst enemy. Fear, greed, anxiety can lead to impulsive decisions that can quickly blow up our accounts. We need to develop a mindset that allows us to stay calm under pressure, and to make rational decisions, even when the market is against us. Additionally, Forex trading requires a significant amount of time and effort. We need to stay up to date with the market news, analyze charts, monitor our trades, all while managing our risks and adapting to changes in the market conditions. It's a job that requires dedication, perseverance, and is definitely not a get rich quick scheme. Many traders, including myself, have fallen victim to unrealistic expectations. We think we can quickly make a fortune with minimal effort and no experience. We all seen the ads and the hype on social media, make 10,000 in a day or become a millionaire in just a few months. But the truth is, Forex trading is not a magic formula that guarantees instant success. It takes hard work, patience, and a deep understanding of the market. I remember basically when I first started off, it was probably right before COVID, or yeah, right before COVID. I thought I could jump into the market and make money right away. Um, I didn't really put the time and the effort to learn, and I certainly didn't have a solid strategy because my thought process is, okay, you just buy and sell. If it goes up, you just look at it, you buy. If it goes down, you sell. But it's a lot more to it than that. All right, and it forced me. I didn't lose a lot of money, I would say, at the beginning. But the harsh reality of it was it forced me to reevaluate my approach from this and start from scratch. So I lost a little money, but I think I was more scared to lose all that money. So I ended up just staying on demo. But I did more uh, once I think I spent more money on strategies and strategy hopping more than anything. I think I spent more money on trading view, I think, than anything. And trading view is a good tool. I still use it to this day. But I think I spent more money on buying the biggest package, thinking I can have more indicators and the more tools I have would make me more successful. And in some people's cases, it might be the case, but not in mine. All right. And so uh, here's the thing. All right. So if you have a job, I'm gonna be honest with you, you shouldn't be trying to day trade in the beginning. If you just now brand starting out and you have a job, I would say stick, like I say on every video, stick to the daily time frame. Learn price action on the daily time frame. Because if you're trying to do a 9 to 5 and you're trying to trade the London session, depending on where you're at, if you're trying to trade the London session while you at work, at a grocery store, or you at a retail store or a fast food chain restaurant, and you in the U.S. trying to take orders, or a restaurant trying to take orders while you're trying to trade the New York session, it just doesn't work out as you think it's going to work out. You get what I'm saying? And regardless of what you heard, some people might, be the lucky ones to go that route. I'm not saying that's not possible. What I am saying is that think about it on a more realistic phase. Trading is a long-term thing. It's not a get rich overnight thing. I've been trading for almost 7 years now, coming up in well, this month. See what I'm saying? In the first year or so, a couple years ago, first year or so into it, you know, I was all over the place trying to find different strategies, trying to trade the 5 minute, the 10 minute, the 2 hour, the 4 hour, the 3 hour, trying to find something different going from. And if you looked at my trading view indicators list, I have hundreds. And instead of me just going to the daily time frame, now if I had to switch and do it all over, I would start from the I would start from the daily time frame. I'm gonna be honest with you. I've been the most successful on the daily time frame. I would start learning price action from the daily time frame and start on the demo, get about a year's worth of analysis and analytics of the trading strategy I'm using, and then I would go from there. But I wouldn't quit my job. I would, of course, I was in the Army, so I wouldn't quit no job. But I can tell you it was definitely hard for me, and I did lose some money trading because I was trying to trade while I was at work, and it's just not a good recipe for success. It's more of a recipe for disaster. All right, so let's go into it. And I do these every month. Especially if you're in my Discord group, make sure you click the link. If you like what you hear so far, make sure you click the like button and you hit the subscribe button and click the bell for notifications. And also, if you look in the description below, there will be my Discord. I have a Telegram and Discord, but most of my stuff is in Discord because it's more organized. All right. So I put this out every month. All right. And for some reason, people still ask me, what's my strategy? If you've looked at the past 20 videos, you know, I've locked in and I'm not going anywhere. All right, for this. All right, so this is the November Forex wins, and I have some losses in there. Successful trading setups and the recap, along with an explanation of why certain things did it. All right, now if you look at this, excuse me. All right. All right, so if you look at USD Chef, all right, USD Chef, and my strategy is plain and simple. All right, the 20 SMA, and if you look at another video up top, I'll post it in the link up top about the breakdown of the whole strategy. So if you're looking at this strategy right now, this video right now, make sure you go back, and the link is in the description for the very first video of my strategy breakdown. Because if you're coming in now, you probably won't understand when I say 2 candle highs, 2 candle lows. All right. So at the beginning of the month, you know, USD Chef, it gave us some price action movements. They was driven off shifting market dynamics, including the Federal Reserve policy expectations, the Swiss National Bank, and inflation and employment figures. The pair also responded to risk sentiment changes, all right, with investments. All right, and I'm not going to get too deep into that, but if you look at the 2 candle lows right here, 2 candle lows right here, if you look on the left, I don't know if you can see this, my whatever it's called, my arrow. But if you look, it's 2 candle lows, all right, and we jumped in. We used the ATR, the 5-period ATR, and we went from there. I'm sorry, the 14-period ATR. All right, Euro USD, and this PowerPoint will be down below so you can use it for your template for next month or January. All right, Euro USD. All right, real quick, you know, it was divergent monetary policy signals from European central banks, economic data such as Eurozone inflation. U.S. employment reports, GDP growth fueled speculation about interest rates and paths. So if you look, it's 2 candle highs. Once it crossed over the 20 SMA, I was looking for the 2 candle highs, completely not touching the SMA. All right. Once we seen that setup, we looked at the higher time frames. Once we looked at the higher time frames, and they both were biased, you know, both for strong sale. And especially on the monthly, if it was a strong sell as well, that's an A+ setup. We went on and jumped in with the 14-period ATR. We did 1-to-1, and we got in and out in about 4 or 5 days. All right, GBP USD. All right, the same thing. It influenced by mixed signals from Bank of England regarding future rate hikes, coupled with softening UK economic data, such as GDP retail sales. All right, 2 candle highs. If you see at the beginning of the month, you see the line right there at the beginning of the month. I always mark it off. I do a different canvas every month. You know what I'm saying? I'm like a painter when it comes to this. All right, you see it broke through at the beginning of the month. So around the 8th or 9th is when we got the 10th is when we got our first signal. All right, 2 candle highs, completely not touching the SMA, marked it off, and we 14 period ATR was our stop loss and take profit. 1-to-1. It took about 4 or 5 days. We were in and out the market. All right. And the reason why I say all this is on the daily time frame. All this on the daily time frame. So the biggest key is that if you have a job and you get in when the candle closes 24 hours, so you're going to also look at this around 5 to 8 o'clock. All right, 5 to 7 p.m. My time is Central Standard Time. But the biggest key is that you want to wait for the candle to close, and before you jump into the trade, you want to make sure that the spread is lower. You know, sometimes some of these brokers, they have the biggest spread when the market is closed. You do not want to jump in when the spread is 120 pips on some of these pairs, or 12 pips. You want the best price possible when you jump in. All right. All right. USD JPY. This happened around the 6th or the 7th of the month. All right. Again, you know, it's driven by contrasting monetary policies between the Federal Reserve and the Bank of Japan. The dollar gained support from robust U.S. economic data and speculation about the interest rate decisions. And if you look at this month, this was election month, especially in the U.S. So a lot of USD pairs became strong due to the economic data. All right. If you look at this, it's two candle lows. Two candle lows. If you look at what I'm saying, is when I say two candle lows mean it's closer to the SMA on a buy. I say two candle highs on the sell because it's up top and it's closer to the SMA. All right. And we got in with the 14 period ATR. You see how I'm repetition. All right. All right. 14 period ATR. All right. You can find that on the Trading View app. All you have to do is go to the indicators app. On the indicators tab up there, type in ATR. Once it comes up, it will come up at the bottom. You just go to the setup wheel or setup cog and just type in 14. You can use the 5 or the 14. It's up to you. You do your own back testing. All right. EuroCAD price movements were influenced by divergent economic data and monetary policy expectations. The Eurozone weak Eurozone growth and inflation data. This happened at the beginning of the month as well. All right. First thing you want to do as well, and I'm not going to beat this dead horse today, but the first thing you want to do is once you see the setup, you see across the SMA, right? You see the two candle highs, all right? Completely not touching the SMA. Once you get that second one, what you actually want to do is you want to go to the higher time frames, go to the monthly, weekly, and the daily. All right, if the monthly is, neutral, but the weekly and the daily are strong buy, that is a B plus setup. You can still potentially take that one. All right. Now, if the weekly, if the daily is strong buy, the weekly is strong sell. I'm saying on this one, EuroCAD. If the daily is strong sell, the weekly is buy, and the monthly is strong buy. You want to leave those alone because all three time frames are going different directions. All right, so that is not an A plus or B plus setup. You want to take only A plus setups. If you look over there, our EuroCAD definitely had a good setup, so we took it. All right, AUD USD. All right, AU. So again, the reason why we had a good month with USD pairs is because the election. All right, in November, AUSD price movement was shaped by contrasting economic data in Australia and the U.S., Australia and the United States. Australian dollar faced pressure from declining commodity prices, particularly on iron ore and some soft domestic economic data. Meanwhile, the U.S. dollar was bolstering by robust economic indicators and speculation about Federal Reserve policy. You look at this, it's about the 7th. See, a lot of these things happen on the second week of the month. And with that being said, we always wait for the beginning of the month. We don't look for trades at the beginning of the month or the first week of the month because it's still kind of playing out. It's trying to see where it's going to go. So me personally, I let the market play out. And sometimes I do miss trades, nice trades, but it's okay because we get our just due and our money back at the second and third week. All right, if you look at this, it's two candle highs for a sale. All right, use this 14 period ATR. Now the 14 period gives you a closer stop loss, what I noticed, and then the 5 period gives you a wider stop loss. So it's up to you. All right, it's up to your risk tolerance and what your account can afford. And a lot of people are like, man, well, I can't trade with the daily time frame because I got a small account. But here's the thing. and I don't want to get into that whole thing, but I'm just give you a sneak peek of a snippet of it. The biggest thing is if you're trading on your last $100, you probably shouldn't be trading in the first place. I would stick to the demo account. All right, and if you get have you a few dollars and that you can put into it, start save some money up, get you about $500 to $1,000, and you can trade it. And yes, you can trade with $100 on the daily time frame. All right, you might not be able to take 10 trades at the same time, but you'll be able to take the A+ setups. And if you do it on 0.01 lots, you definitely can trade on $100 with a low barrier of entry. All right. Other than that, let's go to the next one. All right, USD CAD. USD CAD price movements were driven by interplay of U.S. Economic strength and Canadian dollar sensitivity to oil prices. The U.S. dollar gained support from the robust economic data, shifting Federal Reserve expectations. Meanwhile, the Canadian dollar fluctuated with the changes of crude oil prices. And a lot of you guys, if you just now starting off trading, or you've been trading a while and you didn't know that the crude oil correlates with the Canadian dollar. All right. If you look right here, we actually had one around, like I said, around the 7th to 8th of the month. We had two candle lows, broke through the SMA. Well, it actually didn't break through. It just went to a retest down to the SMA, and then it bounced off. So that was good enough indicator for me to go ahead. And then I looked at the higher time frames, and they were all still headed in the bullish direction. So that was a good indicator for me for A+ setup. All right. NZD USD. All right, influenced by contrasting economic conditions and monetary policy expectations in New Zealand and the U.S., the NZD faced pressure from soft domestic economic data and concerns about global strength. Global growth. Concerns about global growth, particularly in key trading partners like China. All right. So if you look at this, it didn't have to cross over again. It did a retest to the 20 SMA. All right. We looked at that first and second candle on the two candle highs. All right. Once we seen that, we went to the higher time frames again, like I said, and then we found that A+ setup, and we used the 14 period ATR for our 1-to-1 risk to reward ratio. Don't listen to everybody else when they start saying, "Oh, you can't make no money with 1-to-1 risk to reward." All right. If you have an A+ setup and a good solid strategy, and with back testing, you can do whatever you set your mind to. All right. All right. Euro AUD. In November, Euro AUD price movements were driven by contrasting economic conditions in the Eurozone and Australia. Euro faced pressure from the weak growth and inflation data. The Australian dollar was influenced by commodity price trends, diverging monetary policy expectation between European Central Data and Reserve Bank Australia. If you look right here, so this one came definitely towards the 15th of the month or the third week of the month. I would say, well, like the first part of the ending part of the second week of the month, third week of the month. All right, two candle highs. Two candle highs. Boom, boom, didn't touch 14 period ATR. Looked at the top, looked at the higher time frames. All right, Cash F, same thing. All right, this is a support from stronger oil prices and resilient domestic economic data. Meanwhile, the Swiss franc safe haven appeal fluctuated with change in the global risk sentiment. All right. Two candle lows for the for a buy signal. Looked at the higher time frames. All right, y'all see that? Y'all see this trend that I'm using? It's not even a trend. It's the same thing over and over. And if you look at September, when I did the September wrap up, when I did the October wrap up, when I'm doing the November wrap up, now December might not be the same wrap up. We might only get 1 or 2 trades. But if you look, I got about 15 pairs here. So if you're trading on the daily time frame, the biggest thing is have patience, patience, patience. The way you become successful in the market, and a lot of you guys probably don't make it to this 19-minute juncture because you want me to give you a fast strategy. I'm not going to give you a fast strategy because the market, it takes time and patience. All right. I'm giving you the keys to success. I'm giving you the keys to success. I am giving you the keys to success. All right. Let's go to the next one. AUD NZD. All right, this trade actually took 1 day. I got into it. I think it was last week. I got into it. Did the higher time frame. All three matched. Two candle lows on here. Boom, boom. 14 period ATR. Did my 1-to-1s, It actually hit while I was still looking at the market around Asian time frame. So it didn't take long. So just think about it. Is the price movements reflected contrasting economic conditions and monetary policy signals from Australia and New Zealand dollar. The Australian dollar faced pressure from a weaker commodity price and soft domestic data, while the New Zealand dollar was influenced by market expectations. All right, let's move to the next one. All right, so this one actually hit and now is back in retracement, but it's okay because it doesn't matter once we're out the trade. All right, had a long week. All right, we this month it was the movements were influenced by monetary policy and divergence between the European Central Bank and Swiss National Bank. The euro faced pressure from sluggish eurozone economic data and soft inflation. All right, if you look at it, it crossed over. It crossed on one end, then it crossed back over towards the middle of the end of the month. So we looked at it. We waited till we got the 2 candle highs. All right. 2 candle highs on the second one. Once we see that, we marked it off. We went to the higher time frames to make sure we can get that A plus setup or a B plus setup. If it's a D or F setup, meaning that all 3 time frames are different, then we will leave it alone. It doesn't matter if it hits or not. We're looking for the 80 to 90% setups, A plus, B plus setups. All right, let's move on to the next one. All right, so on this one, it faked us out. But if you look at it, if we looked at it to the left, we should have just put our overall. We should have actually went to the higher time frame. All the time frames said strong buy with strong bullish pressure. All right. If you look influenced by a combination of UK economic data, Bank of England policy and expectations, and global risk. But here's the thing: the reason why we should have just stayed out of this trade because it was at a key level. All right, and that's another thing you got to put into it. You have to look at your key levels. And if it's bouncing off, continues to bounce off that key level, we will not take the trade. All right. And so going from there, let's go to our other loss, CAD JPY. All right. So if you look at the JPY pairs for the past 2 months, they have been straight bullish. They have been going on an upward tear. All right. Now, finally, once we get to this month, it looks like it's still trying to go up, but it's more moving towards consolidation. Same thing with this. A combination of factors affected both Canada and the Japanese yen. All right, the Canadian dollar benefit from higher oil prices, and as Canada is a major oil exporter, providing support to the currency. Meanwhile, the Japanese yen faced pressure due to the Bank of Japan's continued ultra loss monetary policy. All right, so we took 3 losses this month. With that being said, I hope you made it this far, and I thank you. So what's the main takeaway from today's video? Is Forex trading is not a get-rich-quick scheme. It is a journey that requires dedication, perseverance, and willingness to learn. It's not about being perfect. It's about being consistent and adaptable. Don't get me wrong. It is possible to make some good income trading Forex, but it takes time, effort, and realistic understanding of what it takes to succeed. All right, and I had to learn that. So that's why I moved to the daily time frame. A lot of people, there was a shift in, everybody moved to futures. Everybody moved to, oh, well, we don't have this broker. These prop firms is going crazy. If you think about it, if you just save the money and wait a whole year, if you just start starting off, my advice to you, and I know you probably don't want to hear this, but take a whole year of learning, put some money aside in a trading account, even if it's $100 to start off, trade it at 0.01 lot size. All right. If you can't make money on a small account, then find a reputable broker like Forex.com or Oanda or another reputable broker. Trade or now Forex might I think is $100 the barrier of entry on. If you trade, offshore broker might be a little smaller than that. I know Hanko trades don't require $100, but if I were you, I would just every month you have a trading account. You just add money to your trading account and trade your live account. All right. Now you know what it fits, and you trade it on the lowest level. Now you know what it takes to, to make it in the game, and you'll get that psychology right of you losing and winning money instead of you being constantly on demo. Now, I do suggest it's while you're learning the strategy, do it on demo so you're not losing real money. So once you actually have a back tested strategy that you want to test out, and you're profitable on your demo, then move to live trading, put a little money in the live trading account, and then go from there. All right. But I'm going to tell you, and if you want to, there's other prop firms out there, but I can promise you that, to me, in my opinion, before I spend $500 to $1,000 on a prop firm account, I would make sure I'm able to trade. You know, I'm not going to downplay it. Make sure you're able to trade before you spend that much money. And before you do that, just put it in your own account. Put the money in your own account and trade for 6 months to a year, or however many, how much. Just at least do 6 months. If you're not profitable in 6 months with your own money, at least you can take that 1,000 or whatever you got left back out and reevaluate your life. All right. But other than that, you guys have a good trading next month. We're done so far, and that's a good thing about the daily time frame. We're the last week of the month. We're not trading. We're done. We're waiting for December, and I'm gonna be honest. We probably won't even trade in December because we made some good profits so far. But if you're looking for a group or community that it's all about trading, make sure you hit the link down below. Thanks for watching. If you had any experience with Forex trading, whether it's good or bad, please share in the comments below. And if you're new to Forex trading, make sure you check out my other videos for insights and tips. Other than that, all gas, no brakes.